Is that resistance from 1998? What's going on, everyone? Welcome to the channel. Let's get right into it. Let's follow this trend line back into the depths of the dot-com bubble. So October 1998. Let's see where this began. Okay, so here's where I started the trend line. You can see that all throughout the mid 90s, this acted as support, and it began acting as resistance as the tech bubble crashed, right? So now we are at those levels currently. And that's it's not looking too good. We have to we have to cross above this to continue our bull run. So that is currently acting as a very clear support at the 396, 397 level. We're also at support on March 2009. So if we zoom out, and on January 2009. So both of these levels are acting as a support, and I'm going to go ahead and show you how that turned out. So these are both of these levels. I just drew essentially, just connected this point from January 2009 to April 2010, and then from March 2009 to July 2010. So we ended up getting these two levels that were acting as resistance all throughout this entire bull run. And then finally, on the monthly chart, we closed in November 2020 above these levels, which was very, very bullish. Congratulations to everyone that went long. So these are really key levels currently on the SPX. And as you can see at the bottom of your screen, the bottom right, the SPX equals the SPY. The NDX is the QQQ, which is the Nasdaq, and the RUT is the IWM. And just the difference between the X's is essentially it's just a difference in the way that the option contracts are exercised. And the SPY, the QQQ, and the IWM, you get dividends. So those are ETFs. It's not that serious. But on the SPX, the NDX, and the RUT, you get way more historical data. So that's what we were looking at. So yeah, that's essentially it on the SPX. I'm going to go into everything in detail a bit more. But first, let's look at the NDX. We're also at January 99 resistance on the Nasdaq, which is very, very interesting to look at. As we can see, if we take this level of resistance all throughout the end of the tech bubble, really, and then we take this level in December, you can see a clear cut support and resistance levels here. And we are now at those levels. We crossed over the December 1999 level recently, but now we are at the January 99 level at resistance. So let's see if that holds up. The RUT. Let's look at the RUT. So obviously the IWM was not as affected by the tech bubble as the SPX and the NDX. So what we're doing on the IWM, the RUT, is we're going to look at the bottom of the financial crisis. So from March 2009, I connected a trend line to August, okay? And we can see that we're at this level of resistance. We still have some ways to go on the Russell 2000, which is a very bullish sign because if we look at the March levels for, the SPX, we crossed above it. We're well above it. And the NDX, this is the March 2009 level on the NDX. So it doesn't even make sense to look at this. But for the RUT, there's still a lot more room to go, which is why, in the growth sector, especially right now, the growth sector is, outperforming value sector. Sorry, the value stocks are outperforming like crazy. I went long the IWM, and oh man, it was just beautiful. So yeah, that's why value is the safe bet for long term at the moment, especially since we have a Democratic three-party holding in the Senate, the House, everything. And interest rates are also going to go up, so it's good for the IWM and the Russell 2000 and value stocks. So here is the chart for everything. We're still very bullish in the long term for the Russell 2000. So now let's look at the SPY on a daily chart. Okay, let's look at how everything coincides. So we can see that there were there's a lot of levels of resistance. Obviously, this is the October 99 level or 98 level. This line right here, we bounced clean off of it, and now we're testing the March trend line from the bottom of this recent, pandemic. So this is the trend line from recently, and we're at this level of support, really. So we have to see how we respond around this level. So another thing that I was looking at is I make a fib level from the bottom of this level to the most recent highs, and we can see that we are still above the 38.2% fib level on the SPY, which is, it's a good sign. Usually, what happens, especially since, for the MACD, we still have a bit lower to go, in my opinion. But the fact that we're holding above the 38.2% fib level is still pretty good. But another level of pretty good confluence would be the 0.50% level on the SPY, only because there's also good confluence with the 50 SMA, and we're also trading above the 20 EMA on the SPY. So, we're still in a, buy the dip sort of situation here until proven otherwise. These trend lines need to break. Otherwise, we have the Fed constantly buying back, securities and just constantly bullish. So you can't look at the market and trade it as an economist. It doesn't make sense right now. Obviously, the market doesn't really make sense where unemployment is through the roof. All of these different factors are extremely bearish. But, we have to be agnostic to all of those different factors, and we have to look at everything as a whole, really. So, recently, obviously, for the past year, we bought every dip. So instead of, thinking too much into everything, we're going to buy the dips on these support levels, and we're just going to abide by the levels. If these levels start to break, if this level starts to break, there's another level that we can create touching this trend. That would also have to break, which is going to probably be around, 380, 379. Then that's when things would look a little bit more interesting. But currently, things look still pretty bullish on the SPY. Okay, so 380, what is this? 388.22 needs to hold, and then 388.5 needs to hold, which is also the 50 SMA. So there's a lot of support here. Now let's look at the QQQ. Okay, so now on the Nasdaq, obviously, what everyone's looking at is look, look, this is an inverted head and shoulders, right? 310.90 was a very important level that everyone was looking at on the Nasdaq. This needed to hold. We saw that it held, right? Inverted head and shoulders. Boom, boom. Look, this is bullish, right? This is one case to look at. And then the neckline would be this level of resistance at 324.30. Right? You get this level, you draw it down here. Obviously, it's not perfect. Just clone this. Boom. And then you take it from the break of the neckline. And then you get what? 350 on the Nasdaq. If we get 350 on the Nasdaq during these, yeah, look, I don't mind. Okay? But I don't see that really happening in the short term. If we do, that's fine. I don't really mind. But the other case is that, look, we are also in a bear flag. And we can see that when we, when we draw this line right here. Obviously, you can see the flag here. You clone this, and we get another picture. You take that at the break, you end up getting, what is this? 270 essentially on the Nasdaq. Now, that would bring us back down to October levels. That is also that's a pretty drastic move as well. That's another 13% to the downside. I also don't see how that would be really plausible. But again, we're taking it one day at a time. Let's see how everything works out. Right now, currently, 310.90 is a very important level. Really, just if you're at this level, you could just long at it and use it as a stop loss. And if it falls, you could just buy puts and use that as a stop loss as well. It's pretty simple. So yeah, there's that. And 324.30 is another important level as well. But another reason why I'm still a bit wary of the Nasdaq is because this MACD still needs to cool off a bit as well. We're about to cross below this level, and usually when that happens, obviously, the price also tends to fall. So the next level of support on the Qs would be 307-ish, right? That would give time for the MACD to fall down a bit, to cool off, and then propel upward. So let's see if that happens. But again, we're taking it one day at a time. These are the levels. The IWM. Oh, one more thing. I wanted to look at the fib levels on the Qs, and we saw that on the on the SPY we were around the 38.2% fib level, whereas on the Nasdaq we are at the 0.50% fib level. So obviously the Nasdaq is underperforming, right? Now let's look at the IWM. The IWM has made 2020 for me. I made so much money on the IWM. Thank God. Like that was beautiful, honestly. Like I love the IWM. Like I am in love with the IWM. I've been trading this sucker for I love the IWM. Anyway, we are also at, key levels of resistance, but we're at key levels of support to the downside. And the IWM, you can see that the MACD is also much more oversold than the Qs and the SPY, right? So the IWM being the strongest ETF currently, right? Because value stocks are going to outperform essentially, right? Um, the fact that the IWM is very oversold, we saw a green candle. Let's see if these support levels hold. Now, another thing that I want to do is create a fib level for these levels again, and we are at the 38.2% fib level at 224.20. If that level doesn't hold, then 220 needs to hold, which is also a very interesting level because it's confluent with the 50 SMA on the daily chart. So this whole area really above 217, 218, I would not feel, I feel very comfortable longing these levels right here. But then if we begin to fall through these levels, that's a whole different story. But right now we're in a very bullish environment. Everything is just melting upward. Not melting, but it's in an upward trajectory. Stocks only go up, and that's that's what we're doing right now. So one other thing that I wanted to look at is next week, Chairman Powell is going to give multiple speeches. Okay, so tomorrow he's going to give a speech at 9 a.m. Tuesday he's going to give a speech at 10 a.m. And then Wednesday he's going to give a speech at 10 a.m. as well. So usually when he speaks, anything that he says is bullish. Hopefully we see him address the 10-year yield. Hopefully he gives more bullish outlook for interest rates and the buyback programs, and everything just continues to seem bullish and optimistic in his eyes. Hopefully, because that'll be good for equities. If he doesn't, then all of these levels of resistance, we can easily fall back down to, where we were before, and just I hope we don't go there. But again, we're taking it one day at a time. So one more thing I want to share was the 10-year yield, right? So recently, obviously everyone was looking at the 10-year yield in correlation to the Nasdaq, but I would argue that, in the past week, really, the Nasdaq and the 10-year yield haven't had as much of a strong correlation. The correlation started to weaken. So we can see from February 11th, um, on the Nasdaq, February 11th was over here. Where was it? Over here. Okay. So the Nasdaq was much more choppy, right? Much more choppy over here. But the 10-year yield has been going up straight, really. So the correlation hasn't been as strong recently. We see this level. This really needs to hold. If it breaks this level over here at 1.68, then this trend line essentially. If this trend line breaks on the 10-year yield, that would be very, very bullish for the Nasdaq. I don't think I have time to share other charts in this video, but if you like this content, if you learned something from this content, please definitely give me a like, subscribe to the video. Subscribe to the channel, leave a comment, do all that good stuff. Thank you so much. This is my first YouTube video. I hope I did good. Hope you guys learned something. Thank you so much. I'll be posting every day.